The VIX comes in up 16, and part of it is a lift. Morgan Stanley at a 180 level up to a 183, 184. Let me get Goldman Sachs up here. Rich, help me here with Goldman Sachs as well. They are out with earnings, and I got Goldman Sachs from a 932 up to a 930. I'm on a center tendency at 936. A nice lift. They are minting money.
Yes.
Neil Sipes has Excel spreadsheets downstairs that, it's on a need-to-know basis. I mean, Damian Sassower can't see Neil Sipes' spreadsheets here. On those complex spreadsheets, Neil, what is the distinctive feature of what Goldman Sachs and Morgan Stanley are doing?
Yeah, I think what we're seeing from both of them is the broad momentum across their franchises. When we look at these two names versus the other banks that have reported in earlier days, we have much less of a deposit and lending type focus, much more of the capital markets focus, which is the business that everyone's expecting to boom, right? And what we're seeing now is I think we're seeing some investment banking fee beats at Morgan Stanley, similar to what we saw at someone like JP Morgan in recent days is, the momentum is building in these businesses, notwithstanding some of the perhaps unevenness in the fourth quarter, particularly at JP Morgan, where we saw some deal timing sort of falling perhaps into the first quarter. The broad expectation is 2026 is going to be good, and 4Q is sort of a checkpoint on that path.
Across America, the way you listen to us, we're looking at the earnings here. We've seen it from JP Morgan, Bank of America, Jane Fraser with a nice lift at Citigroup, and now Goldman Sachs and Morgan Stanley. Without commercial interruption, I should say, Neil Sipes with his expertise from Bloomberg Intelligence. I'm going to cut to the chase. Are they benefiting from nothing more than Trump's stimulus of different ways? Is there a liquidity push here? Kudlow would say of MO, or however you want to define it, Neil, downstairs where I can't go. But is it just simply a stimulus that Wall Street's picked up on?
I think there's a little bit of that. I think it's just sort of a perfect storm where the activity is coming, right? We're looking at trading numbers, and I see Goldman here, equities sales and trading, looks like a massive beat, right? So we're seeing the market tailwinds sort of flowing through this business in terms of trading, the eventual build in investment banking, which again looks okay in the fourth quarter, but is much more meaningful in 26 and 27, particularly for these names like a Goldman Sachs, who leads in M&A. That's a business that's been sort of deprived over the past handful of years. The banks have been paying for potential, not paying for performance. So we're going to be looking to see bigger step-ups in 26.
Headline here that I'm sure Jamie Dimon sits there with his Bloomberg in his office.
You know he does.
And he's just watching us, listening to Neil Sipes right now. Here's the headline Mr. Dimon cares about. Apple Card markdowns more than offset by reserve at Goldman Sachs. Alexis wants to jump in here, but since we're commercial free, I'm going to be rude. How big of a screw-up was Apple Card for Goldman Sachs?
Yeah, I up for debate. I mean, I think the numbers show you that the whole consumer foray has obviously created a pretty significant drag on the franchise. And what we've seen over the past handful of years now under David Solomon is the refocus on the core, right? Leaning into the capital markets business, leaning into investment banking, where they tend to be number one or number two in most revenue buckets and client franchises, and sort of moving away from the consumer businesses that are left for more of the traditional banks. So we're relieving ourselves from the Apple Card portfolio that was heavily reserved, lower on the credit spectrum in terms of credit cards. So moving out of those businesses, freeing up the capital to lean into some of the businesses, again, that we're seeing come across the screen that are expected to be even stronger moving
Alexis,
forward.
Do you see how he's got the nerd watch on? He's got the watch on that everybody in Brooklyn...
What is that watch?
It's a watch from like 40 years ago.
It's a Casio.
Wow.
A Casio watch.
A relic on
Does
the
anybody
wrist.
in the control room have a Casio watch on?
I can't be alone.
Where did you get it?
You are alone, Neil.
How much did you overpay in Brooklyn for that puppy?
I was gifted it by a fellow employee for my marriage, so I'll have to pass along the
I think it's super cool. Nerdy, but
I assume you're complimenting it by bringing it up.
His fellow employees gifted me for one of my divorces. Alexis,
not that
continue with Neil.
This year, though, we're looking at a lot of M&A activity. We've already seen it. We're only 2 weeks into the year. IPOs tend to, I think it's going to be a big IPO year. Everybody we're talking to, right? OpenAI, Anthropology,
SpaceX.
SpaceX, exactly.
Anthropic.
I mean, So, I mean, I would imagine they're going to be minting more money as the year rolls on, people like Morgan Stanley, Goldman Sachs, firms like that.
Right. And I think when you even look at M&A last year, it was very large cap led, right? We had these blockbuster transactions that were announced in 2025. About a third of total deal volume was from those really large transactions. So the breadth in the M&A rebound hasn't really hit. So that's why we're pretty optimistic moving forward, is some of that sort of mid cap where most of the transactions are taking place has yet to actually accelerate. That's where a lot of the financial sponsors, private equity firms live. They're waiting for that acceleration, and we're starting to see it.
Okay, one of the greatest bars in America is the Holiday Inn outside the basketball court at the University of Dayton. There's like this giant arena, and there's this Holiday Inn. Lisa, I'm sitting there with a Nobel laureate and a Federal Reserve Bank president. We'll keep their names out of it. I'm buying for MRB. The beverages are on Mr. Bloomberg. I call Redo, keeper of the Amex. I got a laureate and a Fed president in Dayton, Ohio. Can I splurge? They go, yes. I get the bill and it's like $42.12. And the laureate's drunk me under the table. And it's because in Dayton, Ohio, the martinis are $5. I mean, you know.
But that's like happy hour price.
It was like, yeah, but it's always happy hour where Neil Sipes went to school. Out in Dayton, these big banks that you follow, Neil Sipes, are like the Wall Street big enemy in that. How do these banks here connect with Dayton, Ohio, and the rest of America?
Yeah, I think they do. I mean, a lot of that can be sort of consumer footprints at names like a JP Morgan, B of A, that are expanding those branches. For some of the more institutional focused, like a Morgan Stanley, Goldman Sachs, a lot of that might be the wealth franchises. But again, these are firms that are more focused on the higher net worth buckets, where you're going to find those in the Northeast.
Do they need the
West
people
Coast.
of Ohio? Or do they just ignore them and go over to Europe and find high net worth?
I think there's probably higher revenue generating customers elsewhere for some of these names that we're looking at. But eventually, these customers need to be banked, and that's perhaps more the regional and community banks.
I hate to do this to you. We're on YouTube. You look great. You styled it up today. Great on short notice.
The watch.
Neil, Sarah from Williamsburg wants to see the watch. You got a camera right there in front of you. Thank you, Lisa, for help. Can you just put the watch up there? There you go. There it is, Sarah. I hope that works out for you.
That gives me like 1990 vibes. Does it not? It really does.
That's your luck. We're talking Cartier here, and instead Casio's where the money is. Neil Sipes, thank you so much on short notice on Morgan Stanley and Goldman Sachs continuing this boom, and you wonder, like, okay, we've seen this before. Does it have legs? Everything I'm seeing, folks, is with the stimulus and with the Trump stimulus is to come through the 4th of July.